Hello everyone, in this video we'll talk about mutual funds. What are mutual funds and what are the different type of mutual funds available in the market that we should know before doing any financial planning or before making any investment decisions. So let's get started. So in simple terms, a mutual fund is an investment option offered by fund houses where they pick top performing stock bonds of various sectors and bring them under one portfolio. So basically, it's a combination of securities where the fund manager decides the amount of exposure to equity or debt depending on which category of fund they are in. So, fund manager builds a diversified portfolio to offer reasonable returns at lower risk than the stock market. So, since fund managers create and manage the portfolio, they charge a fee in the name of expense ratio, where buying and selling various securities is within their power. So, basically, this is about the mutual fund where you can where the fund managers basically pick the stocks or bond or a combination or depending on in which type of mutual fund you are investing, and they make a portfolio and then they invest in there. So basically this is about the mutual fund. Now let's get into what are the different types of mutual funds available in the market. So first one is the diversified fund. So these fund invest in companies across sectors. So for example, few funds invest in pharma, retail, automobile, maybe oil and gas. So basically these are invest in various sectors. So अगर एक sector में अगर कहीं पे अच्छा नहीं चल रहा है, so basically your second sector can pick up. So there is a balance between the fund. Okay, so basically these funds are generally meant for risk averse investors who want a diversified portfolio across sectors. It's not that it is limited to one industry, they have a diversified sector. The next one is sector funds. As the name suggests, this fund invests in specific business sector or industry. These funds are targeted investors who are prospects of a particular sectors basically. So basically those invest in a one sector. So it's not like that we have a combination of various ones. It's just that we're investing only in pharma or we are investing only in oil and gas. So basically these are sector funds which are specific to one specific sector or an industry. Next is the index fund. So these funds invest in the same pattern as popular market index like S&P, Nifty, like that. So the money collected from the investors is invested only in the stocks which represent the index like the Nifty index fund will invest only in the Nifty stocks. So the objective of such funds is not to beat the market but to give a return equivalent to the market return. तो इसमें रिस्क के जो फैक्टर्स होते हैं वो बहुत माइन्यूट हो जाते हैं because we invest as per the market going on. So they give us a return equivalent to the market return. Next is the tax saving funds. These funds offer tax benefit to investors under the Income Tax Act. So opportunities provided under these schemes are in the form of tax rebates under the Income Tax Act. Next is the debt and income funds. So these funds invest predominantly in the high rated income bearing instruments like bond, debentures, government securities, commercial papers and other money market instruments. They are best suited for the medium to long term investors who are averse to risk and seek capital preservations. They provide a regular income to the investors. So basically these are for the ones who are who are planned to invest for a medium to long term investors and who don't want to take risk. Okay, and they are into high rated fixed income bearing instrument like bond, debentures, government security. So risk जो होता है इनमें बहुत कम होता है. Okay, so next move on to liquid funds, which is also called money market funds. So basically these funds invest in highly liquid money market instruments. The period of investment could be as short as a day. They provide easy liquidity. They have emerged as an alternative for savings and short term fixed deposit accounts with comparatively high returns. So these funds are ideal for corporates, institutional investors and business houses. They invest their funds for very short periods. Basically, as the name suggests, they are very liquid in nature and they are very easy to get returns. So the next one is gift funds. These funds invest in central and state government securities. Since they are government backed bonds, they give a secured return and also ensure safety of the principal amount. They're best suited for the medium to long term investors who are averse to risk. Next one is the balance funds. These funds invest both in equity and fixed income bearing instrument in some proportion. They provide a steady return and reduce the volatility of the fund while providing some upside for capital appreciation. So they are ideal for medium to long term investors who are willing to take moderate risk. Basically, it's a combination of इक्विटी शेयर्स प्लस फिक्स्ड इनकम बियरिंग इंस्ट्रूमेंट. सो अगर इक्विटी शेयर्स में लॉस हो रहा है, सो ऑब्वियसली फिक्स्ड इनकम में तो आपकी एक स्टेडी इनकम आएगी. सो बेसिकली एक बैलेंस फंड है जो contains a mix of both the funds. So basically it has moderate risk. It has neither very high risk, it is neither a very low risk, so it contains a moderate risk. So these are the basically different types of mutual funds that are available to in the market. We also have a on the basis of flexibility of the mutual funds, we also have two different kind of funds, which are open ended funds and close ended funds. So basically these open ended funds are those funds which do not have a fixed date of redemption. Generally they are open for subscription and redemption throughout the year. Their prices are linked to the daily net asset value. From the investor's perspective, they are much more liquid than the close ended funds. And the next one also comes a close-ended funds. So close-ended funds are open initially for entry during the IPO and thereafter closed for entry as well as exit. These funds have a fixed date of redemption. One of the characteristic is that they are generally traded at a discount to NAV, but the discount narrows as maturity nears. So basically these are open-ended and close-ended funds as well. Now there are the different rights that are available to a mutual fund holder in the India. You should be aware before investing. You should be aware what are the different rights that are available to the mutual fund holder in India. So an investor can send complaint, as you know that SEBI is the regulator of mutual fund. So an investor can send complaint to SEBI, who will take up the matter with the concerned mutual fund and follow up with them till they are resolved. If you have any problem, you can directly contact the SEBI and they will do all the necessity involved. 75% of the unit holders can pass a resolution to wind up the scheme. Okay. 75% of the unit holders with a prior approval of SEBI can terminate the AMC of the fund. The trustee shall be bound to make such disclosure to the unit holders as are essential in order to keep them informed about any information which may have an adverse bearing on their investments. And one of the most important rights is that they should receive dividend within 30 days of their declaration and receive the redemption of repurchase proceeds within 10 days from the date of the redemption or repurchase. So basically these are the different type of rights available to the mutual fund. So before you are investing, make sure you know all the rights available. So basically this is about the mutual fund and different types of mutual fund and what are the different rights or mutual funds. I hope this video is useful to you. If this is useful to you, please don't forget to subscribe my channel. Okay, bye. Thank you.